All right. Good morning again, and welcome back to the fresh week. It is 2:30 a.m. Eastern, 15th of January now, uh, Monday into the first UK live session for the week, and a very warm welcome to all who are joining or just joined in the past 2 days into our family. Please go through the educational stuff, educational videos, and do not hesitate ever to put a comment or write an email to me at Japee@yahoo.com or joining the Telegram channel. Now, let's evaluate the situation. What has been since the past couple of weeks. Friday before close. Uh, Again, we got tipped out in the euros and the pounds. Pound we were not trading after getting stopped out, but euro, yes, we got one more stop hit. At this point in time, the status is that we're just holding the short positions in gold, and there are no other trades active. Even the dollar index we got pipped. Just before the weekend, last weekend, it was only one trade on the desk. That's what it is right now. I'm going to discuss three charts in this session, brothers and sisters. By any chance, if you are not getting excited at this point in time, you should be after this session is over, and after you understand or know what story is being told by most of the charts, but we are going to reduce the instruments that we are focusing on starting this week. It will be euro, gold, and dollar index, specifically these three trades all the time. All right, let's touch base with a few wave counts. Normally we don't do the counts during the live sessions, but let's do it today. It is required. Okay, let's get started. I would want to discuss the weekly chart, but thought, okay, that would be that can be done separate. That would be a wonderful bigger picture view. But let's at least understand the story in the since last 1 year now, January 2017 through 2018. That itself will clear a lot of things. Opportunities are right in front of us. Then the extended wave 3, corrective wave 4, double zigzag, ABC X and ABC, so WXY. And in the last part, before that, let's draw a few trend lines. This session will go on for about 7 to 8 minutes. We want to bring it down below 10 minutes each session. Alright, that's the trend line, support trend line, and the immediate structure was that of an ending diagonal, but it still remains valid. And the only thing is that prices should come back into the diagonal either today or tomorrow. It should not stay on the north side of this trend line. Let's change the degree 1 to represent the diagonal, 2, 3, 4 and 5. Alright. Anyway, all means if we just place the Fibonacci ratios, I mean if we assume one probability to be the beginning of a new trend, that we can see 5 waves count completing now with the termination point of the ending diagonal as well. So let's do the first probable wave count, and that would be of a beginning of a trend. Let's say that's one probability. 5 up for the new trend, if at all it is. Then the next could be 3 down, which potentially brings prices lower to either a 50% or 61.8%. That is coming up to 1.1. This is one probability. The second probability, which on the weekly chart it says this could be not the beginning of a new trend but a part of an expanded flat which began way back in 2015. Now, if that is the second probability comes out to be true, then we are looking for the beginning of a new downtrend, right, which would bring prices below 1 point of absolute parity. In both the scenarios, at a trading point of view, whether it's short term or long term, why I'm giving you the bigger pictures to keep the long term view in mind. If you look at the shorter term scenario, we have to, or we will take one more short call, one more risk very shortly. I'm just waiting for immediate support to be taken out. Sorry, that level is not very far, almost 2180. Here it is, 2190, not even 80, just about 15-20 points lower. So let that first support be taken out, and we can initiate a short call after that, or just after a pullback. Right, we can place our stop loss a bit away from the high. 2239.40 is the high. We'll be placing our stop loss a bit away from there. Alright, one more shot needs to be taken here. It's a good high probable risk reward ratio. Looking at the daily chart and the long term perspective, support comes in at 1.19, followed by 1.17 and then 1.15. So these three subsequently should be taken out on a daily chart basis. Alright, so watching for one more reversal here before we initiate a trade. Okay, gold need to go on a weekly chart. We got two situations again. It was wave A, B, C, D. If this is termed as wave E, then it should reverse ahead of 1357. Alright, and if it is not wave E, if it's the beginning of a new trend altogether, then it's going to be break above this particular resistance line, which is passing now around the 1350 mark. A push above 1350 confirms that gold is headed north towards the 1400 handle. We are short at this point in time and will remain short with a stop above 1357. If a bearish turn or bearish reversal here, will be breaking that trend line. You know that we are still counting on this triangle or contracting triangle structure to come true. uh, Prices should react. No suggest no suggestive trades or fresh trades at this point in time. But if you are short, remain short with 1357 stop above that. Fresh, we will issue again on the channel for those who are wanting to take fresh shots. But that will take some time. At least one support needs to be broken, and as far as the figure is concerned, the 1336, at least we need to go below 1336 to initiate fresh shots. Alright, so this is the longer term view for gold, and the shorter term picture, we will wait for a break below 1336 to initiate fresh shots. Okay, and the dollar index, again the same similar structure is seen like the euro USD, and here it is. I'm not labeling. We are almost 10 minutes into the session now. Let me use the arrows. Wave 1, wave 2, extended wave 3, and then ABC wave 4, expanded flat, wave 5 ending here. Alright, so we need to we will watch out for prices to rally. Actually, if you are a very conservative kind of a trader, you will wait until 92.58 is taken out. Right, so either it is going to move in a form of a corrective rally, if this is to be considered as first impulse of a new trend altogether, and 3 waves corrective rally brings us to 98, 50, 70 levels at least. And the other probability, as we discussed, as euro, if it is a part of an expanded flat which began in 2015, then there will be one more high above 10350. Both the cases we are looking long, and on the short term trading point of view, you'll have to allow at least one small resistance being taken out, which could be around the 90-95 levels. Here it is, 90 levels. It's almost done. We'll wait for that to be taken out and then buy again on dips. Right, that would be a bit aggressive form of trading. If you are conservative, as I said, please wait until the break above 92.65 and then buy on dips after that. Alright, so that these three are the charts that we'll be monitoring closely, and re-entering euro and the dollar index sides. Gold updates, anything new will be sent across on the Telegram channel immediately. Alright, so let's hang in around for a few more hours. We're just beginning the new week, and we should be seeing some exciting moves in the days and weeks to come. So like euro USD major reversal, looking from these levels. We're not speculating from where, but these levels, it's very close to a reversal now. Alright, brothers and sisters, thank you again for joining me online. If you're not yet subscribed, please do so, and for any trade updates, you might want to join the Open for All Telegram channel, t.me/Japee. And until the next session, that is New York Live, 8 AM Eastern today, thank you again for joining me, and good luck to your trades, and take care, and God bless, brothers. Goodbye.